In this video, we'll be taking a look at a few chart analyses to get you prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. If you're interested in learning to trade Forex like a professional, check out our Forex trading course on Udemy. I have the link attached in the description below. Without further ado, let's get started. So this is a gold chart on the daily time frame. As we discussed last week, we're waiting for a bearish candle close below this area of value, and obviously we had that last week. So I'm going to go down to the lower time frame to see if we can spot out good trade opportunities for next week. Meanwhile, since we've made a new low with a very good candle close below this support level, I think the next logical price levels or price target will be around this support level, because we had a consolidation around this price level and we had two multiple bullish bounces off of this level. So this will be our next logical long-term area of value where we expect to see some bullish bounce for higher price targets. So going down to the lower time frame, I'm going to start from the 4 hours time frame to see what's happening down here, right? So after we had our significant breakout below the support level, we had a very good retest. So this is what I'll be watching out for to go short in continuation of this new price action or new price development. So I'm going to wait for a consolidation around this price level, right? Giving us a good base, a good support level for me to go short. This would be my scenario to go short on gold. So this is pretty straightforward, because right now we are currently trading below this area of value or this support level, now turned into a resistance level, because we had a good retest on Friday and we had a price decline. So I'm going to be waiting for a consolidation, some sort of a bearish continuation pattern for me to go long on gold. Please and please do not just jump into the market on Monday just because you see a red candle going to the downside, right? So we could get a bullish divergence, send price upward, consolidate a little before we eventually go lower. So this will be my scenario to go short. So even if we get a red candle next week and we seem to be declining, I won't just jump into the market if we don't get this pattern, because this pattern will help me get a tight risk to reward ratio. So a smaller stop loss in line with a a good take profit target that's worth the trade. So this is what I'm watching out for gold. I wouldn't be buying gold right now. I'm going to be looking for only sell trade opportunities, because we just broke through this support level and we seem to be heading lower. So that's it for gold. Moving on, we're going to be talking about US30. So real quick, last week we talked about how we could bounce off this support level, and we did bounce off that support level as expected in our weekly analysis last week. So this is still a downtrend. Why? Because we have price making lower highs, lower lows, and when we got to this price level, we had a very good resistance level, with price finding it difficult to break above this level. Though we've had higher lows, with the this means the bulls are building pressure towards this resistance level, but right now we seem to be heading lower because we've been rejected at this resistance level. So this is something to watch out for. So if you take a trend line across these lows, this trend line could be our next possible price level where we could expect a bounce of this price action. So I'm going to go to the lower time frame, so it's easy for us to spot out good trade opportunities as day traders, right? So I'm also going to show you a few setup I made where I was able to take advantage of some sell trade opportunities. So after we bounced off of this resistance level, which was around this price level, as we discussed last week, I waited for price to break through this area of value, because price has acted as a resistance before, now retesting as a resistance before, now retesting it as another resistance after breaking through that price level. So this is kind of like a flip zone, right? But just that the caveat here is that this level was not used as a support. So most flip zones are in line with a trend continuation, right? So if the flip zone comes with a resistance first, it breaks through, then it acts as a support the next time price goes to that level, right? So if it's in a bearish trend, if it acts as a support first, then it acts as a resistance the next time price comes to those levels. So that's how to signal out solid flip zones. But in this case, this is also a flip zone, but not as good as you would expect it in a trend continuation pattern, right? So we had a retest and I went short here, and my stop loss was around above these price levels, where I rode the trade all the way to this area of value, which was around, I think that was around 300 pips or so. We're going to pull up this price to, yeah, this was around 380 pips, but I took my profit around 300 pips. So that's it. So right now we seem to have, broken through this area of value again. So same pattern, we had a resistance level here. So we had another resistance level here, right? Another one here, good breakout, multiple price retest, 1, 2, 3, 4, and now we've broken through, retesting just the same pattern we had up here. This is what we're having right now. So I'm already in this trade. I got in on Friday, and I'm going to be riding this trade till we get to this support level, right? So this will be approximately 300 pips or so. So I'm going to be holding this trade to get these price levels. Then I'm going to hold a few of my positions. So I'm going to scale out gradually, hold a few of my positions till we get to this trend line. Remember, this is the trend line we drew on the daily time frame. Wedging our higher lows towards the resistance level we have on the daily time frame. So this is it briefly. I'm going to be waiting for price to simply go to my take profit or this trend line for me to close my trade positions. But if you are not yet in this trade, there's something you could also watch out for, right? So you could wait for a consolidation like this. So this is a 2 hours time frame. Mind you, I go into trade on a 1 hour time frame. So you could wait for a consolidation like this, maybe probably another retest, and then a bearish breakout for you to go short, right? So this would be another scenario for you to go short if you are not yet in this trade, and your stop loss is simply going to be around this highs here, while your first take profit target is going to be around this support level. Yeah, so this support level 1, and you can trade the rest of your position till we get to this trend line. So this is how I'm going to trade US30. I dropped this analysis on Friday in our Discord. If you're not on our Discord, we have a free community on Discord. Use the link in the description below to join our Discord right now. It's totally free. We share lots of chart analysis during the week. You get to meet professional traders in our community who also share their, trade setup. So that's it briefly for US30. I wouldn't be going long right now, but if I see any, changes in the market that signals a potential bullish move, I'm going to share those updates in our Discord. So moving on, now we're going to talk about Nasdaq. So Nasdaq, I'm going to go over here. So this is Nasdaq charts on the 4 hours time frame, right? So we had price making this all-time high here, and we had price making lower high. So I expected a very good bearish reversal from this area of value because we had 2 bearish rejections from this price level, and now we seem to have gotten exactly that. So I took a trade at this resistance level with a very tight stop loss, rolled it to around 200 pips, and I'm going to go down to a lower time frame, as low as the 1 hour time frame, to see if we can spot out good trade opportunities for next week, right? So here's the 1 hour time frame on Nasdaq. This is a very strong bullish trend. So when you are going short in this kind of trend, you have to be very careful. So the only reason why I'm going short right now is because we just bounced off a significant area of value, and I think there's a good chance this trend might be changing. So going short in this kind of trend means you have to be extremely careful, because you could be falling into a trap of going against the trend, right? Let me call it that way. So I'm going to show you the only reason I'm going to be going short in this market environment or this trading environment, because we are clearly in a bullish trend. So normally you just take a bounce off of this area of value. So when price comes to this level, you buy. When price comes to this level, you buy, and so on. But because we just bounced off, got rejected at the resistance level, a significant area of value, then I think there's a good chance we watch out for a trend reversal, right, where price keeps making lower lows. So the only reason I'll be going short here, in line with our price rejection from the all-time high, is waiting for price to take out this support level. Okay, I'm going to adjust this a little, and I'm going to zoom in a little so you can clearly see this chart. So I'm going to watch out for something like this. So I'm going to watch out for a touch and a consolidation on this support level, and then a bearish breakout. So the moment we get a bearish breakout, that would be my signal to go short. So I'll go short on gold. My stop loss is going to be above the consolidation that leads to the breakout, and first target is going to be around these price levels. So that's a not so decent risk to reward ratio, but for me, this is the kind of trade I love, and I'm going to be taking this trade, right, because it works in line with my trading strategy and my trading plan. So if this is not the kind of trades you take, you can simply skip. But I would only be going short by the time we take out the support level. The reason is because we would have violated the laws of the bullish trend, starting from the top. So when we take out this level, the next level to contend with would be this other area of value, right? So the next possible price level to take another shot will be waiting for price to either consolidate on this resistance level or this area of value, giving us another bearish breakout, or we wait for price to consolidate underneath that level, right, using it as a resistance and then giving us that bearish breakout. So this would be another price level to look for another short position. Meanwhile, we would have gone short here. Then the next price target, if we take out the other area of value, would be this one. So this is how you trade price action when you are trading against the trend. You'll take out the levels one at a time as the price evolves, right? So you don't just jump into sell trades. Okay, so if you are going to be a risk taker, let's say you're going to go long when we get into this area of value just because it's a bullish trend, then your stop loss will just be below the support level, while your take profit can go as high as this resistance level. But I wouldn't be trading that right now, because if you understand price action, then you understand that there's a good chance we might be heading for a price reversal, because we just got rejected at a significant area of value. So I'm going to be looking forward to taking only short positions. I know most traders will not agree with me because it's a bullish trend, so why go short when we should be looking for opportunities to go long? But the only reason why I'm going short, like I said, is if we take out the lower lows, right, the higher lows, excuse me. So you can see what I'm trying to say is that you have a swing low here, we have another higher low, then we have a higher low here. So by the time we take out this low, following a consolidation and a breakout, it means we will be heading lower. Next target will be around this price level. So if we take out this area of value, so this resistance level, then next target would be this level. So if we take out this level, next target will be this level. So you get the idea. So you trade as we take out the important area of values, right? Because we are trading against the trend. And the only reason why I'm doing this is because we are getting rejected, or we just got rejected from the resistance level. So if we didn't get rejected from this resistance level, maybe we made a all-time high, or we made a significant high above this resistance level, then I would still be looking forward to taking buy positions. But right now, it's clear that this is a significant resistance level, and the overall trend on the daily time frame still remains a bearish trend. So that is why we are taking sell trade. So I'm going to the daily time frame now to show you what I'm talking about. So on the daily time frame, you can see we had a high, right? This is a high, a lower high. So we haven't taken out these highs yet. So technically, this is still a bearish trend, right? So we only had a mini bullish trend within our overall bearish trend. So now that we've gotten rejected at this resistance level, then it's logical to expect a potential price reversal to the downside, at least maybe to this area of value, before we look forward to start thinking about opening more buy trade opportunities, right? So that's it briefly for Nasdaq. Moving on, we're going to talk about crude oil real quick. Crude oil, we talked about this last week, and I went short when we took out this trend line in continuation of this bearish trend. So if I zoom out a little, so this is the 4-hour chart on crude oil. This is a bearish trend, right? We have price making lower highs over the past 1 to 2 years now. Lower highs, lower highs, lower highs, and now we are trading within a range where we've actually gotten good trade opportunities to trade within the range, taking buy trades when we get to the support level, taking sell trade when we get to the resistance level, right? So going down to the 2 hours time frame, this trade setup was shared in our Discord, and I believe so many traders were able to take advantage of this price action on crude oil. So I'm going to make a quick recap. So we had a short position around this price level. Target was around these lows here, right? So this was around, let's see, approximately this was approximately 250 pips. So I did that and took some good profit. But the wick into the support level was fast, so I couldn't get in. So this is what I'll be watching out for to go short. So we're going to take a look at the short case scenario, and then we're going to look at the opportunity to go long, right? So I'm going to wait for price to slowly creep into this area of value. If we get a reversal candlestick, then I'm going to try for a short position right? Aiming for these lows. This is how I'm going to trade crude oil. So this is going to give me a very tight risk to reward ratio. The only reason I'm going to be going short here is if we get a bearish engulfing candle, a very good doji, and the following candle after the reversal candle is a bearish candle, right? So my confirmation will be waiting for the reversal candlestick, then waiting for the next candle to close bearish. If it's a spiny top, a hanging man, or a doji, right? But for a bearish engulfing candle, the bearish engulfing candle already confirms the bearish reversal. So that will be my signal to go short around this area of value, right? Aiming for this support level here. So stop loss is going to be around this price level, and my entry is going to be just below the area of value after our bearish reversal pattern. And then my take profit is going to be around this price level. So this is the first level where I'm going to consider going short in line with the overall bearish trend. But this is going to be a bit risky because this will be at the middle of our our range, right? Our overall consolidation, because crude oil seems to be consolidating within this range. Second price level where I'm going to think about going short, that's if this doesn't work out or I don't get a reversal candle at this price level, then my next target to go short will be around this resistance level. So this will be the next possible price levels to go short. That would mean price will have to creep slowly upward into these price levels for us to look for opportunities to go short, where our stop loss is going to be above the resistance level. Take profit is going to be around this price level. So this is how I'm going to trade crude oil, right, following the price action that evolves from this commodity. So for a long position, I wouldn't be going long right now because the overall trend is in a bearish trend, right? So the only way I'm going to consider going long is if we indeed break above this resistance level. So if we get price action moving into this resistance level, let's say moving to this resistance level, breaking out and retesting or consolidating, followed by a bullish move, this will be my signal to go long, right? So I'm only going to go long when we establish ourselves clearly above this resistance level. That will be my only signal to go long on crude oil. So right now, I wouldn't be going long. So even if we come back into this support level, so I know some people want to trade a bounce when we come back into the support level. But the rule of trading is that when price tests a particular level too many times, that level is bound to break. So we've had 1, 2, 3, and 4. So 4 bounces up the support level. So the next time we come into the support level might mean a bearish breakout in line with the trend, right? As a continuation of the bearish trend on the daily time frame. So that was why I wouldn't be going long anymore when we come into this price level, because there's a good chance we get a good breakout. So I'm going to go short when we get into this area of value, followed by a reversal candlestick, or I'm going to go short when we come into this area of resistance. And lastly, the last case scenario will be going short. Excuse me, we'll get rid of these lines. So the last case scenario will be going short when we come back to this level, consolidate a little, and get a bearish breakout below this area of support. So this would mean probably a wider stop loss, because if we enter the breakout, then our stop loss will be above the consolidation that leads to a breakout. Then take profit can go as low as, let's check the daily time frame for that. So if you check the daily time frame, that will give us a clearer picture of where our take profit could be. So take profit could be here. So first take profit could be around these price levels, yeah. And I wouldn't bother for a second take profit, because this is probably going to be a good enough take profit already. So I'm going to go back to the 1 hour time frame, so we can use the price range 2 to determine how much take profit is going to be. So using the price range 2 for price range 2 for a short position, this will be approximately 500 pips with a potential stop loss of 200 pips. But your stop loss is going to be determined by how big of a consolidation we get before the breakout. So we might not get a stop loss that's as wide as 200 pips, right? So for example, if we get a price retest at this support level, the consolidation could be as low as this, right, as little as this, and then we get our bearish breakout. So this would mean a tighter stop loss for us, because our stop loss is going to be above the consolidation that leads to a breakout. So your stop loss is largely going to depend on the consolidation that leads to the breakout. Mind you, this consolidation might also happen below the support level, so we might get a very good candlestick break, a retest, and then a consolidation below this resistance level, followed by another breakout as a bearish continuation. So in this case, our entry is going to be around the breakout, and our stop loss is going to be above the consolidation that leads to the breakout, while take profit as usual is going to be around this price level. So this is how I'm going to trade crude oil here. Lastly, we're going to talk about GBP-JPY, massive bullish trend, and this means we're going to be looking for opportunities to go long only, right? So I'm going to go to the daily time frame to see if there's anything important to pay attention to where we trade GBP-JPY. So this is daily time frame on GBP-JPY. So let's see. You can see obviously we are having clear skies here. So we're in price discovery right now. Oh, here you go. So the next logical price level would be around these highs. Then after a high, then this will be around these highs. So going back to the lower time frame, 2 hours time frame, for example, this is what we are going to be watching since we're in a massive bullish trend. So let me use the 1 hour time frame because this is where I would be looking for my opportunities to go long in line with this current trend. So as you can see, this is a descending triangle with a bullish breakout. Remember, these triangles, they don't really matter. What matters is where the direction of the breakout. So obviously we had a bullish breakout in line with the bullish trend, and I'm going to watch out for something like this to go long. So we might get another higher low, then a consolidation before we go higher. So this is what I'll be watching out for to go long on GBP-JPY. I don't see any reason why anyone will want to short this market right now because this looks so bullish, right? So stop loss would be around these lows. So personally, I'm going to be putting my stop loss around these lows, right? And take profit is going to be around these highs. So first take profit target is going to be around these highs, and if you use the price range 2 for that, those would be approximately 500 pips, and your stop loss is going to be around 150 pips or so. So that's it briefly for this week's analysis. For GBP-JPY, I'm going to be going long only. I'm not going to be thinking about going short because there's no reason for me to do that. So if you love the content, please like, subscribe, leave your thoughts in the comment section down below. If you're interested in learning to trade Forex like a professional, use the link in the description below to access our course on Udemy. There's a lot to learn, and that's it from me, guys. See you next week.